Traders, looks like Bitcoin went on a nice 10% run. We're going to give you guys a couple of insights as to how you could have used the Fibonacci tool to time this out pretty effectively. Number of different ways to use it. We're going to give our levels on it and how our Fibonacci is really different than a lot of other Fibonaccis that are out there today. So we're going to talk about this move here, where we think price may actually start to turn around, being that we're still in a longer term range. Also, we're going to talk about how Bitcoin futures also did sort of give us a lead into some of this positive price action and how we can expect for big pushes in price sort of out of nowhere when it comes down to it. Also, we'll talk about a few altcoins today, lots of different things to discuss. And I like to ask all of the analysts a question. If you think we're in a bear market, how do you feel today? Right? If you're not thinking range at this point, guys, this is why you may be losing some of your trades. We did not take any trades as of late. You know, yesterday we had a fairly good day and we know how to sit on our hands when we need to. When price moves, we know how to let it move and then make a move based on what price has already done. So no trades on the trading account. Our winning percentage is still pretty much over 90%. And right now the account sits at 25,453. So lots to talk about today. Let's go ahead and dive in. And if you don't know who I am, it's your boy Maestro. Welcome to The Long and Short. Let's go. Welcome to The Long and Short. Maestro here. Thanks for tuning in. Every day on this channel, we try to make you a better crypto trader by showing you smart money price action trading techniques from a long and a short-term perspective. Doesn't matter if you're a long-term trader, short-term trader, we have some tricks to show you guys today. Please remember, if you learned something today or if you like what you see, please like, subscribe, share the video, hit the bell notification so that others can become aware of this type of content, because we do, I think, have a pretty good beat on this market and how things are moving. Let's go ahead and jump right into it, right? What we're going to talk about today first is the Fibonacci retracement and how you could have used the Fibonacci retracement to actually catch this up move as it happened. So the thing about Fibonacci, right, it's a pretty natural number sequence in nature. It's used in a number of different ways. And what we like to do is get an idea of where price may move to after it retraces, right? So there's a number of different levels when it comes to Fibonacci. And what we're going to do is draw one out here, okay? And whenever you're drawing a Fibonacci, your goal is to find sort of a low point in price to a high point in price if you want to get an idea of where price may retrace to after an up move. There's an opposite way to draw it if you think price is going to make a down move. So if you think price is going bearish, essentially you would draw it from the top to the bottom. And what we're looking for is retracements back into these particular levels, right? So let's just bring the one back that we had from before and notice that we only draw these from the bodies of the candles, okay? Doesn't matter if it's a bullish or a bearish candle. What you're really looking for is the highest body in relation to the lowest body, which will give you just this scale here from 0 to 100. Now, the way that we break our Fibonacci out is a bit different compared to a number of other folks. You can choose whatever style you like, but what we're really trying to figure out here is once price retraces, where are the levels it could retrace to? And once it does hit that retracement, where are the areas that price could run to just based off of standard deviation math, right? So if I go from 0 to 1 here and then to 2 here, this essentially is the same standard deviation or measured move of part of a retracement, okay? So just to make a long story short when it comes to Fibonacci, if we're thinking bullish, we want to drag it from the high, from the low to the high in order to get these retracement levels. When price moves up, it will come back down to one of these retracement levels. Now, the trick about Fibonacci is that you want to find confluence. Where these levels sit, they should be in line with other things that you're measuring on your chart, whether there's order blocks, imbalance, liquidity levels, right? Short-term lows, long-term lows, short-term highs, long-term highs. There should be some other thing that aligns with some of these retracement levels. Now here, we don't really see very much, right? And so if we're in a situation where our Fibonacci is not necessarily aligning with things, we do have a bit of an alignment right around the 70%, 80% level, okay, the 62% level, but not so much at the 50% level. There's another way that you can draw Fibonacci, and we're going to detail that to you as well. But for the most part, what we first want to concentrate on are the settings. So price moves up, hits the 0 mark. Now, once you get a movement in price like this, let's just get rid of all of this other price action, okay? Once price hits a high and starts to come down off of that high, that is the time to actually place the Fibonacci. The only other rule to this is that you should be in some sort of a trend. Fibonacci's don't work very well when it comes to ranging markets. Unless you're using them on lower time frames as price is moving towards the top or the bottom of a range, then they'll come in handy a bit, right? And being that we're on the 1 hour chart, and if you zoom out to like a daily chart, more of a longer term perspective, we are still swinging within a range. So if we zoom in a little bit, Fibonacci starts to become more effective the more that we zoom in, right? Because for price to move up like this, it's going to have to go on somewhat of a bullish trend on the 1 hour chart. On the daily, it looks like it's sitting sideways. But on the 1 hour chart, we can use this, okay? So let's talk about these levels here. We have a 0 line, which is the blue line. We have a 0.5 line, which is the 50% line of the retracement, right? And then we have 3 other retracement levels, 62%, right? 70%, which some call a sort of a secret golden pocket level, and then 80% or 0.79, okay? And then you have 1, which is sort of 100% retracement of that move. So the way to view this is once price moves up and it comes back down, it should fall within one of these golden pocket zones of the Fibonacci, okay? So when you go into your Fibonacci settings, you can literally just take a screenshot of this, copy it, paste it into your Fibonacci settings, set up your own colors, right? And then you'll have an idea of what we're looking at as well. But the reason why these are all green is because these are the entry levels that we're going to want to go in at. Not so much the 50% level, right? Which was the actual play here. So one of these levels was hit in regards to retracement. But we want to actually get in more around the 62 to 70% level. These are the golden pockets, which is why these are like green lines, meaning go, right? You have the ability to take a trade here based on the Fibonacci. Now, we're not going to take any trades just on the Fibonacci alone, right? There has to be other confluences. So once we look at the retracement levels, what else is left, right? Next, you have a negative 0.5 level, a negative 2 level, a negative 1 level, and a negative 1.5 level. What are these? So these are the standard deviation levels above the retracement zone. So this is your 0 line. This is the 0.5, negative 1, negative 1.5, 2. Okay. So whenever you have a retracement, okay, and your price movement is hitting these standard deviation levels, you can use these in a number of different ways. You can say to yourself, I'm taking profits at some of these levels, okay? This is the highest mark of standard deviation that this measured move could make based on our Fibonacci. You see how once you creep up into the higher levels of standard deviation, if these have confluences with areas of imbalance in price, which you see here, okay, then this gives us sort of a topping area where price may actually start to turn around and chase some of this liquidity and imbalance to the downside, all right? So this is how we use the Fibonacci. Now, the problem with the Fibonacci is that you can only do this, right, after these type of moves are made. So if you really want to look at this in hindsight, right, if in fact price did create this movement and you set your Fibonacci here, you probably could have caught this 50% retracement move. But it did produce another high, sort of just nicking right above the body of these highs here, all right? So if you were to place your Fibonacci based on this guess, price never really comes back down to these retracement levels. So there's another way that you can use the Fibonacci, okay? Instead of drawing it sort of future tense, you can also draw it past tense. Now, most people don't use it this way, but I love to use the Fibonacci this way because this also gives me confluence. So look at the previous move here, right? You had a high created here, high created here. Then we hit a low, right? So what I'll do is I'll take the Fibonacci and draw it backwards, okay? Now watch how these levels start to align and how if in fact you were drawing your Fibonacci this way, this would have given you some insight. Now, here's the thing. You do have to play around with this a bit. Let's get rid of this other one here. Actually, no, we're going to keep the other one because you'll see how these levels are pretty much perfect. So from the top to the bottom here on this measured move, okay, we would have to drag the Fibonacci the opposite way. So we'll go into our settings, right? We'll go into our coordinates, and then we'll just up this number here. And you'll see the Fibonacci still stays at this high level. It's just not drawn to it. But now you can start to pre-plan, pre-predict some of these retracements in the future tense based on previous price action movements, okay? Now, most people aren't going to teach you how to use the Fibonacci this way, but if it aligns almost perfectly, what you guys can see here, right? This is the first one that we've drawn. This is the second one. If it aligns fairly perfectly with the standard deviation levels, right, that you can find on future tense Fibonacci's, right? Because let's say, for example, you drew this one here, you stretched it out, and then you drew the next one here. You're finding confluence. So if in fact you find this, these were available levels for you, okay? So the problem with Fibonacci sometimes is that you're not going to have price come back down into these retracement levels before these big moves. But if you draw it from previous price action and anticipate future price action, this is just as effective, right? So you could have actually caught some of these movements after this low was created, right? This would have gave you the level for the Fibonacci. You draw it out into the future. And this is sort of the secret way to use the Fibonacci, okay? Because everybody draws it one particular way. They use certain particular levels. I'm giving you two secrets here. Secret Fibonacci retracement levels for the most part that most people don't use and don't know. And then standard deviation levels for price to reach for before it may actually start to turn around on us, okay? And we can see that live in an example here. Price creeps up into this second level, right? Or this pretty much the top level, and it starts to stall, all right? So this is a measured move on a larger time frame that we'll be able to use to take measurements of where larger bullish action may go if in fact we do break out of this zone. But for right now, I think we're still stuck in the range, okay? So that's the easy way to use a Fibonacci to get ahead of some of these moves, right? First push up, rejection down, you falling right into that golden pocket, 62% level, okay? This shows itself on the one that we drew going forward and the one that we drew from going backwards, okay? Once you have that drop, you have another one to the 50% level that you wouldn't have been able to catch. You know, if you've drawn your Fibonacci to this, you may have been able to catch it. But otherwise, right, you're really looking for the highest point of this move. You would have missed this one, okay? Unless you would have drawn it from previous price action, okay? So that's the easy way to use the fib. Let's go ahead and get rid of these, and let's talk about what we think is actually going to happen with the Bitcoin price here. All right, so when it comes to this move that we've seen here, this is very suspicious and takes place right around the same time and same launching pad area as the previous move. And we see how price just turned around on Wednesday, came back down, and sort of finished us off going into the weekend. So will the same thing happen again? There is likelihood that it could. There are still some levels to the top side here that price could go for, both this imbalance and these areas of liquidity here, right? And even these areas. Price could definitely shoot up there and try to take that out as well. But once it does that, I think that price has achieved the objective or in regards to the move, right? So just based on this fib, the standard deviations, they're showing us that the move is already finished. But in my opinion, there still could be some upwards movement here to take out some of these imbalances there, right? Now, you could get a retracement back into this level. Here's another way to use the Fibonacci. All right, so let's drag another one. We're going to go from the bottom of this candle to the top of this one, okay? Now notice, right, we always talk about imbalances and how price could come back down into these imbalances. Let's blow this up just a little bit more for people to see. All right. Now, when it comes down to it, right, we've drawn it from this low candle here to this high point here. If this is in fact the high of price, then we'll see that some of this imbalance, for the most part, all of it, is starting to get filled right in the golden pocket zones of the Fibonacci retracement. All right, between 62 to 70%, you're pretty much filling that entire imbalance. So if price were to come down here and touch into these levels, right, that's a pretty good move for a retracement to move higher. And for all of those people who like to draw trend lines, we can get an idea just based on lower time frames. Let's draw this out a little bit. Let's just take a trend line here and see how some of this stuff lines. Because when you draw trend lines, sometimes they do actually pan out, but we don't like to do it until we've actually done some more analysis. So this one here won't necessarily work for this example. We have to kind of use this parabolic line here. So let's take another ray. Let's draw it here to here. Okay, right to the bottom there. All right, so you could effectively say that this trend line here, right, could act as sort of another gauge that we'll use in our technical analysis. We'll come back to our Fibonacci, stretch this out a bit with the coordinates, okay, and try to get a gauge as to when some of this action may actually, or when it could retrace back to. Okay, so notice there we're using a number of different things here. We're using a trend line, right, that we typically wouldn't use. But what we're using the trend line for is to get an idea of when things may happen, right? So this movement may not come right down and take out this imbalance here. But based on the variable of time, based on this trend line, based on this Fibonacci retracement, based on this low, this high, based on this imbalance, and these areas of pretty much the golden pocket of the Fibonacci, we can sort of align that things may start to happen around March 9th, around, what is this, 21? So later on tonight. Things may start to creep down into this zone if in fact this is the top, right? And price is going to come down. So this is the way that we use a number of different tools, sort of traditional tools, to get a more aligned example of when things may start to either retrace back into these levels for another move up, or where in fact we're starting to reach our tops, right? When it comes to price action and movement. So number of different things that you can use for correlation there. You know, let's just get rid of the things that we're not going to use. But it all sort of proves itself right back out to, we need to fill this imbalance, right? So once we do that, there are a couple of more down here that could get filled as well. But, you know, we'll see. This movement here, very eerily similar to this move here, just not as strong, not as aggressive. All right, so for everybody saying that we're in a bear market, this right here shows you not necessarily so. You know, I mean, price is down since the beginning of the year. And most people say that, hey, you know, traditional bear markets mean that you're down 20% from whatever price level you were at before. And that is true when it comes to equities, right? But for crypto, I think that definition needs to be redefined a bit. 20% moves in crypto can happen on a day, right? So if we just look at Terra Luna, for example, Terra Luna jumped 20% today. I think at the top was 21%. Now it's retracing some of that move. Okay. So just looking at correlations in other cryptos, a lot of them were very active, very up this morning once you came to the charts. Okay. Things were like, whoa. When I woke up this morning, I said, whoa. Right. So all of that action happened pretty much overnight, you know, over the course of the night from yesterday. So, you know, when you wake up and you see things like this, 20%, 10% gains on some of these cryptos and the entire market is pumping, it's very hard to make the argument that we're in a bear market. But at the same time, it's hard to make the argument that we're in a bull market, right? So if you can't decide between a bear market and a bull market, and every week to every other day your opinion is changing on that, then the simplest thing to say is that we are in a ranging market. Price is never gonna move sideways. When people say price moves sideways, what they're really explaining to you is that price is in a range. It's moving up, it's moving down. But price never moves sideways. You'll never see price go like that unless you're on the 1 minute chart and there's just no activity, no volume in what's happening. That's the only time that price will move sideways, guys. When the market is dead, there's no trading. But in my opinion, we're in a ranging market. It's not bullish, it's not bearish. It's a ranging market. Why? Because there's uncertainty in this ranging market, and people want to know and have better certainty on things before they pull the trigger. In my opinion, that's the easiest way to take a look at this, right? When it comes to having a general overall view of the market. So before we really dive into altcoins, right, let's talk about Bitcoin just a little bit more. And, you know, when it comes to us, you know, what we like to do is just find these areas of imbalance. When price is very aggressive like this, it gives us a good indication that it wants to come back to these areas, right? So some of this move may start to get worked more towards the New York afternoon session, just like it was yesterday, right? This is when we were able to take our trades yesterday and just kind of eke out a 2% move before this price really took off, right? Protecting ourselves with a stop loss. Trading smart was what made us able to do this yesterday, right? But the real move was the move long. And if you were to set up your Fibonacci's as we showed you a little bit earlier, you know, you would have been able to kind of catch this move. All right, so we've given you all of our analysis when it comes to Bitcoin daily movements and what we think may happen there. Right now, we're kind of just sitting on our hands waiting to see what's going to happen with price. Now, do we think price is going to come back down? Yes, but we still think there may be some bullish movement left in this market, right? Because we're so close to this imbalance at the top here, it would be hard for me to imagine that we wouldn't at least try to make an attempt to go and get that. And that may take place more in the afternoon hours. Thing is this, New York seems to be, participating in the bullish movements that take place over the, nighttime hours. They take place with that in the morning, and then they reverse it in the afternoon. They've been doing that. So, we want to pay attention. Whatever time frame you're trading, pay attention to how the market is reacting to what happened in the previous session, the previous day. Pay attention to how the market reacts. I trade mostly in the New York session or the Asian session, right? So I want to know what happened overnight going into New York. How are they continuing to move or sort of negating that move? And this seems to be the pattern. They'll pick up on it in the morning, sort of continue that movement, bring traders in, and then reverse it to start snatching up that liquidity more towards the afternoon. All right, and we're seeing that reflect in a number of different things. The Luna is up 17%, but that's down from 21%. So you're seeing it across the board. This is all a coordinated move across the board from larger institutions. They are the ones that have the money to make this move like this. Okay, but don't be fooled. Price could come back down here pretty aggressively to fill in this imbalance by the end of the week, and kind of set us right back in this range, guys. This is what we've been seeing in price action. All right, upwards, downwards, sit in this range. Up, down, sit in this range. Up, down, sit in the range. All right, so as long as price is showing us this characteristic, right, then this is what we'll use to trade. Okay, let's dive into Bitcoin futures because there's a couple of things that we want to point out. So yesterday, when we talked about the commitment of traders, we were talking about this area here, which we'll zoom in again so that you guys can get a better perspective of what you're looking at. So when it comes down to it, the larger speculators, hedge funds, big banks, all of the major players, the whales in crypto, they represent the green line. The blue line are the smaller speculators, retail traders, smaller banks, right? Still millions of dollars on that line, but these are smaller players in the game. The red line represents the commercials, the miners, the exchanges, the guys that hold the crypto. Okay, so that's what each line represents there. And we said that once the larger speculators start to creep above this zero line, they are in a buying mode. They are going net long, which means that the commercials will start to push net short. And that doesn't mean that they're selling everything. Essentially, it means that they're just serving up for the larger speculators because in some ways, they are the only ones that can serve those size orders, right? Retail speculators, for the most part, are holding crypto. We won't go bearish unless there's a real reason for us to go bearish. And right now, we're still net long as well, all right? So it seems like the market is starting to agree that we need to come up a little bit. We can also see on the elder ray that the bulls have assumed power with that hard push. But just taking a look at this price action, right? We showed you guys this on the chart. You're getting this up move, down move, up move, down move. This is another up move. Do we really think we're going to break above this and really start to attack higher levels? We could, but there needs to be more certainty in the market for that to happen. Until that happens, we may just swing in this range, right? So we may just be seeing another recreation of this bull to bear up down swing flow between these two parts of the elder ray, okay? But as long as the bulls have power, that does give us bullish vibes. This can turn around by tomorrow, so that's what we're going to watch. When it comes to the money flow index, we also have some money coming into the market. All right, so very bullish indicators when it comes to the commitment of traders, right? What we're seeing on the elder ray and the money flow index. How do we feel about this, right? Well, the open interest seems to be ticking up just a bit more from sort of a decline going into March. So let's see if this continues to rise, right? Going into April. All of the things that are going to come out over the next couple of weeks, I think, are going to give the real telltale signs of what's going to happen with this market. Seems that Russia and Ukraine are trying to find some kind of diplomatic means to solve their issues. It also seems that the Fed will raise the rates, but they're not going to do it in such a dramatic fashion that is going to shock everyone, right? And they're being transparent about what they're doing up until the point where they actually make the announcement. Now, granted, most people do have a lot of different opinions about what the Fed's going to do. But to me, they're broadcasting this from a megaphone as loud as they can. We're going to raise the rates, guys. We're going to do it anywhere between 25 basis points and 50. That's the goal right now. And if inflation is incurred by that, we may raise it some more. Okay, we may tighten our purse a bit. These are the things they're saying. So I'm going to believe them until other things prove themselves true in the market. All right, taking a look at some legacy charts here. We're still tracking this 200-week moving average heat map. You know, price did make a bit of an upwards movement, so we do have to see how this correlates over the next few days. Fear and greed index. Let's actually refresh this chart. I want to see if this is actually the same. Yep, same thing, 22%, right? So it really didn't move from yesterday, but this bullish movement in price will start to alleviate some of the fear, which could be a setup for us to go back down. So let's see how this plays out for tomorrow. Pure multiple again, we're still waiting for price to kind of reach these lower areas for us to say, okay, these are sort of the prime conditions for us to buy. So 200-week moving average, pure multiple near the bottom areas that we like to see, as well as the 2-year MA multiplier, okay? So these are the 3 charts that we're watching to see if we can find confluence in when price is reaching a bottom of price action movement. All right, let's talk about a few altcoins, right? We did talk about Luna, which, you know, has been very impressive in regards to price movement. Let's go back out to our daily as well so we get a full perspective here. All right, so when it comes down to Luna, guys, it's reaching for that all-time high. Will it take it? Not really sure, but just following the rules of discount to high premium, low premium, which we're getting ready to drop a video on pretty soon, full tutorial on pretty soon when it comes down to it. You know, watch previous videos if you guys don't really understand this terminology. This is fairly easy to understand. You want to buy in the discount in the bargain areas, sell in the low premium, high premium zones, right? This is for long-term hodlers, people who want to take advantage of swings in the market, right? So from the discount to the high premium, you've had many different chances to take profit here as price has made these fluctuating moves. Okay, so Luna is one that we've been watching. Bitcoin is one that we've been watching. Scale in the scale out zones pretty much being hit. So as we see this movement in price, do we think Bitcoin could come back down to 34, 32 still? Definitely. And if it does, then these are the primary areas that we want to be buying Bitcoin. But right now, we're still stuck in the range. These 2 blue lines indicate when the FOMC information is going to come out. So we're tracking towards this, right? And one thing that we mentioned is that depending on how price moves, right, it might just range out going into the FOMC. And we can see that perfect example of this happening now. Price finding lows, price finding highs, respecting the lows, respecting the highs, and then sort of swinging within an interior range here. And this is what we're seeing in price. We shouldn't expect anything otherwise until we pretty much get either through these moves here, through these 2 lines here, or sometime immediately before it. Price could start to make really aggressive moves going into the FOMC with the anticipation of what's going to happen, right? So media is going to be angling one way, the charts are going to be angling one way. What you don't want to do is get caught chasing the move. Whatever the move happens, let it happen, react to it after. That's the way that we're going to play this market here. And that's how we're able to keep our accounts safe. We're not trying to prejudge 2 or 3 weeks out what's going to happen here. We're just watching price action from what it's given us to what we're working towards. There's always going to be some sort of destination for price to reach, okay? And a lot of that is based on time variables, which is why it seems like the media comes in and sort of gets things out there and after price moves. There's always a narrative, guys. So remember this. Time and price are the 2 most valuable things when it comes to your analysis. When things happen and why things happen and where they happen in relation to what you're seeing on these charts is really all you need to know in order to make a good judgment in price, okay? Let's talk about Ethereum as well. You are getting positive price movement all day when it comes to these cryptos, okay? So really any crypto we talk about today is going to be up for the most part. Some a lot more than others. We've called out some of the big gainers here. So Ethereum is another one that's representative of our method working, right? Discount zone to low premium zone, scale out zones, scale in zones. When these areas get hit, you should take action in price in regards to taking some profit off of those books. Taking a look at AVAX, very similar to Ethereum price action, discount to low premium zones. These are the areas where you want to take profit. Even today, right? From yesterday to today, because these are daily candles. If you zoom this in, you can see. Very simple concept. I bought in the discount. I sold in the low premium. The move that I could have just brought out of this was about 11%. These are the things that you just need to buy into, guys, because it works on a regular, consistent basis. These mid lines here, all right, the reason why this works, I'll break it down to you very simply. The reason why this works, guys, is because a lot of these midlines here are lines that essentially price has been stuck trading at for a number of different cryptos. You see correlation here, correlation here. This is like resistance turned into support. But then price just swings within these ranges. You can see pretty much the same thing on a lot of different cryptos, okay? Now, Ethereum, not so much. I think Ethereum's in sort of a odd space because of everything that's happening with NFTs and how they are tied into that space, right? There's been a lot of decline in trading when it comes to NFTs. That's going to affect ETH. So right now, I think some of this price action is a bit of an anomaly, right? They're a bit higher than what they're supposed to be. And I think a lot of that steam was just based off what really happened with NFTs. I think Ethereum, for the most part, you know, even the gas fees are coming down, right? Because there's less trading on the Ethereum network in relation to what's happened with NFTs. So if this were to come back down into these discount zones, I really think that the fairer range for Ethereum to trade in may be somewhere below that $25,000 level. But again, it doesn't have to respect my rules. Ethereum can do what it wants. We just have to react to what price is doing. So these discount zones hold, boom, break up. You're definitely trading the right way if you're buying in these discount zones for Ethereum as we speak. All right, let's talk about Atom. Atom as well is another one that respects the discount to low premium zones, okay? And these are the coins that we want to make positive plays with, guys, over and over and over again. I know that this does get a bit messy. Let's just move some of this stuff over a little bit, right? But, you know, we can go down the list, kind of show you guys each example of how to play these things here. But the overall general message is if price spikes into your discount zone, that's the best time to buy, all right? You usually don't want to buy at the top of it, but if price is showing you positive price action and that these levels are supported, then you have a play, okay? So lots to talk about, lots to explain. We could talk about Link, which is another one that's been in a discount, more bargain zone, but there's been other things in the news, right? Sometimes cryptos just go dark because no one's talking about them. And I think Chainlink is one of those that falls into that category. Very positive project and needed for crypto. Chainlink delivers a lot of the oracles and the information to the blockchain, but nobody talks about it. They're integrated with everyone for the most part, but nobody talks about it, which is why you're going to have sort of these declines in price. Now, when all of these networks start to go on more bullish activity, you know, really turn bullish, you know, based on market conditions, a number of other factors, it could be a number of different things that turn us back into a bull market, then you'll see Chainlink start to rise with the rest of the tide, right? But right now, Chainlink to me is a good way to judge the overall sentiment of the market. It's been down for the most part, okay, from a previous high, and we haven't really rebounded from that yet. So Chainlink, we're going to watch both in regards to sentiment of the overall market because it's integrated with so many things, and we'll also watch it to see how far it'll kind of sink into these bargain levels and use that sort of as a correlation to other things that's happening with price. XRP is another very interesting one, right? So we had a really nice pump with XRP, and it did come back down and sort of swing back into this discount zone where we are accumulating, right? So again, 76 cents for XRP we think is a pretty damn good buy when it comes down to it. You know, taking a look at historical price action, this is an area where XRP will sit for a little while and then kind of launch from, okay? So can we see lower prices here? Pretty sure we can, you know, but we're right in our scaling areas, right? So we do accumulate some XRP from time to time because we're right in the zones where we can do that. More towards the lower levels is where we try to get in, but XRP is another one, okay? Solana, we could talk about that. Again, sort of overall sentiment of the market and what's happening with Solana is down, okay? Everything in a discount zone, but it's popping around here. These are areas where we would like to accumulate for Solana, right? Because we do think that this project can definitely take off again, right? There's a lot of them, guys. You know, we can just continuously go down the list here when it comes to Engine token. You know, there has been a bit of a discussion around the metaverse, and, you know, we did get our push here, right? So scaling into scale out levels, you want to take profits from the discount to the high premium, low premium zones because you may come back down into this discounted zone. Now, do I think that these will start to break out again? Of course, right? Let's look at Mana. Sort of the same price action, right? So the lower cap coins, the correlation that we can make here just based on all of these different things that we've seen, the lower cap coins, they're in discount levels. They're not necessarily breaking out into low premium zones for us just yet, because the higher tide of the market needs to carry them there, okay, for lower caps. But for higher cap coins, right, Luna's in the top 10, you're getting this type of price action. Ethereum, you're getting this sort of downwards movement, but able to pop from a discount to a low premium zone. You're able to get that price action, right? You're able to see Bitcoin go from discount to low premium zones, okay? Okay, so let's talk about the total crypto market cap again, trying to push its way back above that 1.876 trillion. And, you know, once we do, then things should seem to turn bullish again. But again, every time we see, guys, it seems like it's just in a range. And so a lot of these upward movements are just really fake outs to get people either liquidated or sort of just reverse us from these areas. Lots of uncertainty around FOMC, lots of uncertainty around what's happening with the war. So we anticipate that we'll swing in this range for the foreseeable future until things change. But that's our analysis for today. Hopefully you guys have found this useful. If you learned a little bit today, if you got a better insight into the market and the ways that we're thinking, and if this does give you some confidence in how you're trading, go ahead, hit that like, subscribe, bell notification. That way you're notified whenever we do post content. And again, we're going to try to put out some type of information every day on how we're viewing the market. Some videos are going to be very long. Some videos are going to be very short until we find a real cadence on how to just get this information out very quickly. We are a brand new channel, so we appreciate every subscriber, every single viewer. You guys are the OGs, and they're going to be talking about us in the future, I'm pretty sure. Just following these techniques and things that we're doing here and displaying on this channel, we're able to do it live. We're able to give you guys examples. We're able to pull up winning percentages like this that we're building in front of you. Okay, we're not doing anything in the background. We're not sharing trades that we took and then just speaking about them in hindsight. We're showing you the thought process. We're showing you the emotions of the trade. We're showing you the walkthrough of what we're actually doing. And if you guys find this valuable, by all means, join us. All right. With that being said, it's your boy Maestro. Thanks for tuning in to The Long and Short. Y'all have a beautiful day. Salute. We out of here. Peace.